Hello everyone, today is the 23rd of August 2021 and we are in the first trading day of the week. Alright, so in this video we are going to run you through our 5 most focused markets for our weekly forecast, meaning Euro, US dollar, the gold, NASDAQ, the WTI, and of course the Bitcoin. And so we have already posted our weekly forecast, and right now we are just going to run you through what we have posted and to explain it to you in details. Alright, so first of all, let's kick off with the Euro US dollar. So Euro US dollar had another bearish week, right after a short recovery from the week before, essentially breaking new low again. Right, so you can see that last week it came all the way down and broke new low. Now, while reviewing our past weekly forecast, right, it actually followed an ABCD pattern based on the weekly time frame and shall be completed this week should the price drops further into the demand level at 1.16. So I'm just going to quickly share with you Euro US dollar in the weekly time frame, and this is the ABCD pattern that we are actually talking about. Alright, so we are still expecting the price to fall a little bit further and essentially complete this ABCD pattern at this very key demand level. Alright, so coming back to our forecast, so the dollar has been strengthening weeks before the Federal Reserve has turned hawkish, where it now stands ready to taper this year, as in taper their asset purchases or bond purchases, or in short, to increase the money supply. Now, so thus potentially bring about a reverse effect when it does taper. So what I mean by that is that because the market has been buying the news that the Federal Reserve will start to taper their asset purchases, right? So that in itself is actually good for the dollar, and which is why the dollar has been strengthening. But once they actually announce to taper and it becomes a fact, it might have a reverse effect and the markets might turn into selling the dollar instead. So that is just what I mean. I mean, that is a possibility. I'm not trying to say that it will definitely happen in that way, but because it happens a lot of times, which is why I thought that might actually happen again, right? So this week we shall follow the current trend and look for selling opportunities starting from 1.1710, the supply level, and aiming for the demand levels at 1.16. Right, so looking at the chart, you can see that I'm still bearish, especially in the short term, because that is essentially the current trend right now. So we want to sell the pullback. As you can see, if it pulls back to this level, 1.1710 is a pretty good supply level for us to actually go for a sell, and eventually we want to exit at the demand level right here at 1.16, as you can see right here. And of course it essentially completes the AB equals to CD pattern in the weekly time frame. So otherwise we will also be observing for a clear reversal signal as the AB equals to CD pattern does complete in the weekly time frame in the 1.16 demand level itself. Alright, so that is what we have for the euro against US dollar. So since today is Monday, we just want to touch on right now. In fact, all right, if we look at the daily time frame again, I just remove the arrow first, and you can see that this was the previous support, right? And of course, going a little bit higher, this will be the support as well. Now, if we go into the 4-hourly time frame, and we were to just plot a trend line from this high and connect the rest of the high right here, we're essentially seeing that the price is already kind of resisted at this trend line itself. So when it comes to intraday trading or being a day trader, this is actually a pretty good price for us to go for a sell right now if we were to just aim for a very achievable amount of pips within the day. So you can see that there's kind of a breakout from this resistance, but again we are seeing that this support has also turned into a pretty nice resistance and essentially a supply level for us to short in the day itself. Alright, so that's what I have for Euro US dollar right now. So you can actually aim to sell, or I mean right now, or maybe wait for the US session and see if the price does continues to get stay resisted at this level. Alright, so moving on, we have the gold. So the gold fell just a little after a very bullish recovery from the week before amid a strengthening dollar. Alright, so we saw that the week before the price crashed all the way down and reached this low right here. If I'm not wrong, it's a 4-month low, or maybe slightly longer. Maybe I just pull it back slightly. I think it's somewhere right here. It's not loading, but anyway, well, I think it's definitely more than 4 months, right? I think it can be over a year. Okay, anyway, it doesn't matter because we can obviously see that it's a very strong demand level, and price had very strong recovery, and after which it just went into ranging mode for the week. For the last week, right? So the gold has ranged throughout the week as it stayed registered by the supply level at 1795, as you can see, 1795 right here. All right, multiple resistance. So the dollar has strengthened through the week on the hawkish Fed, all right, as mentioned, in terms of starting tapering this year. And most pairs, all right, against the dollar, like Euro US dollar, pound against US dollar, whatever, you name it, right, had turned bullish, had turned bearish, but only, except for the gold, right, was still somewhat resilient and continued to stay supported within its range right here. Right, so however, both highs and lows are notably becoming lower, and we can expect the gold to start the week with a bearish tone at the beginning, or maybe the price will pull back again, retest the supply level right here, 1788 or 1790, before it goes down even further. Right, so this week we will still be looking for selling opportunities as it pulls back to the top of the range, which I just mentioned, 1788 or 1790. And of course, expecting it a strong rebound. If it start to fall, we also expect a strong rebound at the demand level at 1750, right? So let's take a look at the gold chart itself right now. So in the daily time frame, all right, so this is essentially the resistance we are actually looking at. Well, I'm not sure why is it the prices jump right here and now it's coming down. But in any case, we are still seeing it is still trading within this range right here. And so if you look at the 4-hourly time frame, you can essentially see there's a lot of supply level based on the closing opening price. Right, so right now we are seeing that it's actually climbing. All right, obviously there's strong support right here, but if we were to just look in the day itself and just to try to capture a wave of a bearish trend right here, essentially we can still look to sell around this level, at this supply level, and aiming for somewhere just right at the bottom of the range itself, let's say 1778 or even 1780. All right, that will give you about 50 to 70 pips, easily achievable. All right, so that's for day trading, but essentially we are just waiting for it to go even lower. All right, and obviously right here there's a much stronger demand at the bottom. All right, if we just go daily time frame, yep, as you can see, price came up, all right, and it start to a lot of buying and selling, and eventually it goes up. So this becomes an important demand level, right? So that's what we mean in our forecast itself. All right, so moving on, we have the NASDAQ. So NASDAQ pretty much has recovered from a dip last week and is about to retest its current high at 15,170. All right, I mean, just click the play button. All right, right now it is actually at the high again. So let's wait for a while into the US session and see if there is actually opportunity to sell. But anyway, let's continue. So for the past couple of weeks, we have been waiting for a major correction in the stock market amid a strong sentiment of tapering from the Fed. You see, when the Federal Reserve does taper and essentially reduce the money supply, or at least contain the money supply from increasing even more. NASDAQ, as you guys know, is a tech stock, and tech stock has been fueled by the easy money, right, the hot money by the Federal Reserve. So if they're going to taper, that essentially will cause the NASDAQ to actually fall in a sense, maybe in the short term. I'm not saying that it will have a major reversal and just go crashing all the way. No, I'm just talking about a major correction, and that is enough for us to look for selling opportunities in terms of intradays or in terms of swing trading. So let's move on. So ironically, all right, both the S&P 500 and Dow Jones continued to break new high, except for the NASDAQ, which continued to range around the 15,000. So if you go to S&P 500 and if you go to Dow Jones, you're seeing that they are essentially still breaking new high in last week or the week previously, right? But just NASDAQ is still just ranging all the way, right? It's not able to really break new high. So last week we finally saw that all three of them is starting to trade lower and together with the Russell 2000 is now actually trading at the range bottom. Alright, what I mean by that, I mean just go to Finviz, or around my very favorite website, to look at the stock market overview. In a way, you can see the Russell 2000 is at the bottom of this entire range. So it has been pretty bearish, right? If I just click on daily time on the daily chart, you can see that, you see right now Dow Jones, S&P 500, NASDAQ, they are all pretty much trading below its highest, its previous high, and Russell 2000 is just right at the bottom. Right, we are seeing some kind of rebound right here, but essentially you can see that it's starting to form a downtrend right here. All right, so let's come back. So last week, so the NASDAQ has been resisted around the 15,000 level for an entire month, and it has been half a year since the last major correction. And that is very important, because for the stock market to actually have a major correction, it does take a duration of time. And if you just look back on the entire trend of the NASDAQ ever since the pandemic or COVID breakouts in 2020 March, you have noticed that it takes about half a year before a major correction actually happens, right? So right now it has been half a year, and therefore I think it is about the right timing for the NASDAQ to have a major correction, which is why right now, right, this week we will be focusing on selling the NASDAQ at its current supply level, just above 15,100, and aiming for a target at the demand level just above 14,000 right here. So essentially, if the price goes all the way down to right here, it will be very close to 10% correction, because for major correction it usually stays around 10% or slightly more, or slightly a little bit lesser. But in any case, definitely I think coming back to this demand level should be pretty achievable, right? But of course, just before this, you still have the 14,600 or 500 level, the demand level right here, to watch out for as well. I mean, you have all the moving averages coming together, you know, all those conferences. So this is the level you want to watch out for as well, before it can actually reach the demand level right here at 14,000. Okay, so that is for the NASDAQ. I mean, just let's quickly take a look at the NASDAQ chart. So you can see right now it is still resisted at the supply level right here. Right now it's what, 15,131, right? Just above 15,100 is where we want to sell. So if let's say the NASDAQ can, you know, stay resisted at this level throughout the Euro session and come into the US session, well, we might have an opportunity to sell, right? And in terms of intraday, we don't have to aim for too much, right? Like you can see the daily average volume for NASDAQ. All right, if I just were to measure any of the wave, it's about, you know, 299 pips. So just aim for that. Maybe just aim for half of it. Let's say 150 pips. It's easily achievable, just somewhere right here. So you get what I mean, right? So I mean, that's for day trading. But of course, if you are going for swing trading, hold and trade for a longer period of time, then essentially you can look at 14,600 and eventually, you know, for just right above 14,000. So I mean, just to put out the levels for you, right? Somewhere right here, 14,000. Of course, this demand level right here at 14,000. I would say 500, right? So these are two levels you want to watch out for if you are going for a longer term trade. Alright, next we have the WTI, the US oil. So WTI just recorded another record-breaking drop in a week, showing no sign of stopping even in the last trading days. So as you can see, the price came all the way down, has been really bearish, even broke this major trend line. Well, there has been around since April 2020, right? So once it has broke down, obviously it's going to attract more sellers in this case. And it came all the way down, and we are still not seeing any reversal. But we do want to take note, it's at a very key demand level. Anyway, just let's move on. The oil price has definitely reached an extremely overbought level, and it should not be any surprise to see a major correction like this, right? So I mean, obviously it's very overbought for the entire year, or even slightly more than a year, and so it's very normal for it to have a major correction like this, right? And But do keep in mind that the oil is still in a bullish market. Why? Because it's very likely the oil demand will reach another record-breaking level once traveling overseas return in the foreseeable future. I mean, most people has been vaccinated around the world, and countries are opening up, economies are opening up, even in our country, Singapore. So when all of these things start to unfold and economies opens up and allows traveling around, well, definitely there's going to be a much higher demand for oil. So it's a very simple fundamental analysis in a way that we kind of know that the oil demand will just continue to increase. The only thing that can actually helps to control the price is that the OPEC or the OPEC Plus does increase the supply of the oil. All right, but anyway, just put that aside. So putting the fundamental aside, right, when the oil market does a major correction, it is usually within a range of 20%, and guess what? We are just 1% away from 20%. All right, so I'll just go to the oil chart right here. All right, so if I were to measure from the highest level right here and put it all the way down to the lowest, it's already 19.82% correction. Right, so I'm not going to go through too much about the major correction, but you just have to shift back and look for a bullish market in the oil markets, and just go and measure the correction. Whenever there's a major correction, how many percent does it actually pulls back, and you realize that it's around 20%. So essentially that also means to say that the US oil might have completed this entire major correction, and it might start to resume its bullish market or its bullish trend. All right, so let's come back to the forecast again. So therefore, we will resume looking for buying opportunities at the current demand level around 61, but keep in mind that the short-term trend is still very bearish. All right, though it is already extremely oversold. So should the price rebound, we should be able to see 66 again, and eventually resuming into a bullish trend overall. All right, so just repeating what I just actually shared. So right now, if we look at the oil markets, all right, in the 4-hour time frame, or if you go to 1-hour time frame, it is obviously a downtrend. So a few levels to turn off. Before it really resumes into a bullish market, it might range for a period of time, and that also means to say that this bearish trend right now may continue to last for a little while before we see a very strong demand and pushing the oil price a lot higher. All right, so right here, obviously you can see important demand turning into supply level. If you go to the daily time frame, then we'll have a much clearer, a much better price. Usually we like to base on the closing price of the daily time frame, so it could be somewhere right here, or it could be somewhere right here. You can always take reference from here, right, from here as well. So there are a few levels that you can actually look to sell the US oil based on the current bearish trend. Can pull out a trend line as well, right, from the high, connect high. So well, maybe somewhere right here will be a pretty good price to sell again. So you just have to wait, right, wait for the price to go up again, and then see if there's an opportunity to sell in the intraday. If let's say you are bullish, you want to hold it for a longer term, and you also expect that the oil demand will continue to increase, well, you can just wait for a pullback, right? Wait for pullback to the previous low or slightly lower, to actually go for a buy and just hold it for a period of time. All right, that might actually prove to be very profitable in the long run. As it goes up and finally the bullish trend becomes clear, you can continue to add more position as it pulls back. All right, so I'm not going too deep into that. That's pretty much for the US oil or the WTI. Let's move on to our last let's move on to the last one. All right, so the last one we have is Bitcoin. So Bitcoin has remained bullish for the 5th consecutive week, and it has now gained more than 50% of its previous losses. In fact, it's about 61.8%, right? Coming back to the golden ratio. I mean, if I just click on the play button, if I am not wrong, it has reached almost, right? It's almost reaching very strong supply level at this level. But anyway, coming back, there's been a growing sentiment that the crypto market has resumed a bullish trend as demand for crypto payment is growing in different sectors. I mean, if you just look up at the news, the headlines, you're seeing a lot of positive news coming for the for the crypto markets, for Bitcoin, you know. And of course there are still some how do you call that, controversially for that as well. But essentially you alright, let's just move on, right? So but right now Bitcoin is about to face a very key supply level around the 50,000 mark and may bring about another phase of sell-off. I mean, if history is of any guidance, the major correction is still far from over and could still potentially find itself sinking deeper beyond 30,000 again. So this week, we will wait for a clear sign of reversal at the supply level around 50,000 before we start looking for selling opportunities. But otherwise, following the frenzy right now, all right, and we can just buy the pullback from every bullish wave because, well, it has proved to be rewarding, especially when it comes to day trading. So let's just take a look at the Bitcoin charts. As you can see, every time it goes up, it pulls back. There's always a chance to buy and to profit from it if you're just doing day trading. I mean, it has been so obvious, right? It's such a profitable business actually. So what we actually trying to say is that in the shorter time frame, you can just wait for it to pull back, you know, to a good supply level. Is somewhere right here, or maybe somewhere right here. All right, you have a zone for you to actually engage in buying. Of course, you can have the trend line as well. Alright, somewhere right here, 47,000 is a pretty good price to actually continue to buy Bitcoin. But however, you just want to be wary about the supply level right now. It's about to reach 61.8%, and obviously it is a very strong supply because this is essentially where Bitcoin breaks lower and essentially creating a very strong supply level, and you know, it might pose a potential sell-off for the Bitcoin. So essentially that is what it is. But right now I think it might still be able to climb a little bit further. Hopefully it doesn't come too fast. Hopefully it does come down a little bit more to give you an opportunity to buy before it actually reverse. But having said that, alright, I mean, I just want to quickly share with you, right, in the weekly time frame, as you can see, alright, it is in April that it starts to pulse back, alright, have a sell off, and usually it takes longer. If, like I said, if history is of any guidance, I mean, just look at this right here. It is very similar, right? Price came down, it pulls back somewhere right here, but this is just 50%, and it just goes down even more, comes back again, it goes down even more, and this entire pullback or so-called market correction lasted from July 2019 all the way to March 2020. So how long is that? Not very good with my calculation, but that is, I think, at least about 8 months or 9 months. But right now, how long has it been? From April up to now is August, so which is about 4 months. So it is essentially it's only half, right, of the duration. I mean, if we were to really be stringent about it, it actually started from here, 2017, and until 2020, then it started to turn bullish. So you get so I hope you guys get what I'm trying to say. If I mean, when I say about, you know, if history is of any guidance, right? So essentially just that is what I'm actually looking at, which is why I'm still kind of bearish on Bitcoin, especially at its current level, very strong supply level, right? So that is my view on Bitcoin, and that is all I want to share for this week. So thanks for watching our weekly forecast, and we will see you again in our midweek markets outlook.